Hey everybody, it's Pete Renzulli. Welcome to Stock Trading Pro. And more importantly, welcome to Stocks for Breakfast, where we kick off the entire week. We got a ton of stuff packed for you today. You want to make sure you watch from start to finish. We're going to cover, obviously, the Fed is a big part of this week. Last week, we had some economic data, which the market really didn't like. We had one little bounce to the upside, followed by a clobbering on Friday afternoon. And I want to point out some very significant levels. If you've been a regular viewer of the channel, we've actually been harping on in the S&P 500 that one level, which is the 444 to 446 level. We're actually going to start out taking a look at that, but we actually have a ton of stuff to discuss today. But I want to start out with where we're looking at. So when the longer term move here in the S&P 500 actually broke, the 446 level right around here is where the actual down move confirmed. Now, we actually ended up rallying. We had a bullish reversal here, a bullish reversal here, which just completely confused everybody after this giant move to the downside. And we kind of drifted higher. It actually was starting to look like we had some bullish order flow kicking in here. And this bullish gap over here actually started to look really good. But the problem was the underlying economics behind that rally just wasn't supporting it. We've had some really small pockets of opportunity, and sector rotation is now shifting, which is why it's very important to have a process on a day-by-day and week-by-week basis. Now, that process doesn't have to take long, but it does need to be structured. And I want to kind of give you a sneak peek behind the scenes. I don't know why I keep doing that. A sneak peek behind the scenes of how we do it and how I walk our community through this basically every single day. So hopefully I can give you some insights in how you can structure it for yourself. So one thing I think that's really not necessarily understood enough is how we should be adjusting our exposure to the market based on the current market conditions. We had a really long coaching session on this on Saturday where we're talking about that the market and the changes that we're having right now, where there's a lot more indecision, requires that we're smart and we lower our initial risk until we get feedback, positive feedback from the market, that we should be sizing up and putting a little bit more into those ideas. And I'm going to get to what those ideas are in just a minute. We're actually going to break down my entire watch list of sector rotation, industry groups, and a couple of stocks that I'm watching for this week, one long and one short. So I just want to point that out. That big level in the S&P is really what's critical right now, is getting separation from this 446 level. And you can see how much we've actually touched this level, both rejecting it, blasting through it again in the other direction. So, if we could just talk about, like, what does that really mean, right? It's great to see all this stuff on the charts, but what does that really mean? I don't have my wallet here with me, but what does that mean for how much we should be putting into the deal? If it's not obvious, if you can't look at it and say it's clearly making higher highs, higher lows, it's doing it over several weeks at a time, volumes coming in, and I really love that idea. When you can't see that, that's when we have to be smart and say, look, we're not getting paid by the hour. We have to reduce our initial position size and be smart. Even if you have trading losses on good ideas in the current market, which, let's face it, you probably do. It has not been the easiest 5 or 6 weeks. You must make sure that your risk is reduced. So even if you take good ideas and those good ideas don't follow through because of the drag of the market, if you're doing your job properly, you should have smaller losses because you recognize the market was tougher and you reduced your exposure. So I actually want to point out what that means and what that looks like. So if we kind of work our way over into sector rotation for the last 4 weeks, you can see that it really hasn't been amazing. It's been one fantastic week to end August, which kind of made the entire month of August for a lot of people. And that's a really big point that I want to get across. And then we have 2 weeks of kind of nothing, right? So I just want to throw this out there to you. Before you judge whether or not you've traded poorly, ask yourself, how much was actually available? If the market really is not offering a lot and you kind of, took your bumps a little bit there, as long as you recognized it and pulled back a little bit, that's okay. Because if we get back over here, you have a couple of tough weeks, and then you get 1 week where everything just kind of lights up in a big way, you're in there, right? Now, I really want to bring this home because this is really important. We work our way over into the metrics. And you can see we kind of keep these proprietary metrics, especially this one on the side over here. And if we kind of work our way over towards what they actually look like, the advanced decline line's kind of been all over the place, right? But the high-low difference has been severely bearish. and even more so on the breakdowns. Now, the breakdowns are actually a little bit less than they were before, which is where we got that little bit of a rally. Now, this is the important part that I want to get across. So I want to zoom this over here so you can actually see the dates. So you can actually see kind of the last week of August over here, right? This part right here where we had this little bit of buying pressure. This is the power of actually understanding what kind of market that you're in right now and what that should mean for how much money you're putting on the table, how much you're putting out into the deal. So if we kind of go prior to that, you can actually see July was just amazing, right? We kind of lit it up at the end of July. Everything was looking fantastic, right? Now, this is where you start to put a few more pieces into the argument, and you start to notice on a daily basis where July kind of finishes right over here, and then we kind of head into August. And you can see what August unfolded, right? When you start to have what I guess you would call pieces to the puzzle that start to say, should I be accepting more risk? Should I be holding a little bit longer? Should I be in cash and should I be golfing? You start to be a smarter speculator, and smarter speculators are those that understand the only reason we should choose to accept risk is because the likelihood of making money is good. Not okay, good to great. And when you have a process in place, like I'm showing you right now, like we do behind the scenes for the community, you start to step up and you say, okay, I understand where we are right now, and it means I should do this. The biggest mistake by a mile, other than blowing your stop loss, is not understanding that every trade is unique. Every single idea is going to have a different risk profile, a different probability of profit, which is why we're now going to start talking about sector rotation. Technology stocks got kind of clobbered over the last week and a half. Look, earnings haven't really been that great, but there's been pockets of opportunity, specifically software application stocks and software infrastructure stocks, digging down a little bit deeper into those industry groups that were in play for a while. We saw breakouts, CRWD and a few of those kind of stocks traded pretty well, right? If we could take a look, they're actually still in play, right? Big breakout, 2 earnings reports in a row, looking to hold above this 162.50 level. PANW also looking okay. Oracle was actually looking okay prior to earnings, and this is really where technology, and we're starting to rotate out of that. Now, this is the big thing we want to talk about. We work our way over to here, which are the sector stocks, and we kind of zoom this in just a little bit, and I hope you could see that, but we have a new leader. Financial stocks working its way to the top of the list. So what does that mean for us? That means that we have to pay attention, and where those better trades, the breakout trades in that pocket of opportunity and technology has now rotated as the FOMC and Jerome Powell are coming out this week, and financial stocks are now starting to what we call catch a bid. And if you don't know what that means, catch a bid basically means if you happen to be on the floor of the New York Stock Exchange or an active daily trader, what you are essentially looking at is the reason stocks will go up is because there's a bid under the market. And essentially that means there's institutional demand. So you'll actually hear, this is something that was taught on my trading firm in New York City, is we would say XYZ stock caught a bid. And that would literally mean to everybody in the office that it's liquid and there's attention on it right now, which means that it should have our attention. So those software application stocks caught a bid, and now they've lost the bid, and they got really hammered. Oracle came out, pulled down PANW and a few of those stocks. But now we're seeing this. Now, this is really important. We're starting to see blasts higher in stocks that have been beaten down, specifically financial stocks. Morgan Stanley, you can see, has not been on our radar. I'll give all the credit to Sonny in our community for calling out Morgan Stanley over here. And I just want to point this out as well before we start to get into some stock picks. There's little nuances that are very, very important to pay attention to. And I just want to really bring this home. This is really important. You'll notice on my charts, I don't really have any indicators. I have volume. Once in a while, I put moving averages up there. But all I'm paying attention to is price action. You want to learn how to read the order flow and be a tape reader. But here's the big thing, and this is something that is gigantic. Most trading systems get you to the trade. And in our system, it's order flow and tape reading. And that's great, right? You still have to find ideas. You have to put their pieces together. But there's a whole second half of the book that a lot of people just don't put into the radar, put into their plan, which is managing winning trades. Now, we get a lot of people writing in about what's your win-loss percentage and all that kind of stuff. I don't care. The only thing I care about is whether or not I read the scenario well, pulled back on good ideas, and sized up and held longer on the ones that work out, right? Pulled back on the ones that don't make sense and add, if not trade bigger on the ones that do. Win-loss percentage is the biggest bunch of garbage vanity metric that I've ever seen in my life. It is not important. What's important is understanding that you can read the order flow, read the tape, and tape reading is nothing more than if we have long-term order flow. So let's say that you have a stock that is under accumulation by the institutional investors. Let's say it starts on one day, and I'm going to show you that in a second because that's what's really important. Starts on one day and then works its out to a week, and then all of a sudden works its way out where it's clearly under accumulation for 2 weeks, 3 weeks, a month. That's awesome, right? So that's the longer term order flow. That's the institutional demand that we are first looking for. But then reading the tape in the time frame that you're trading. Now that essentially means that if we have a push in one direction, let's say a bullish push, right? Let's say you're holding a trade for 2 days, or let's say you're holding a trade from Monday to Friday. You need to have a metric. You need to have a significant reference point that says, okay, long-term bullish stacked order flow. That's only one part of stacked order flow. The second part is, okay, if I'm looking to be a buyer now and I want to hold this stock for 3 days, just for example, could be for 3 months. It doesn't make a difference. You need a line in the sand. You need a reference point that says, not only is that longer term order flow stacked and obvious, which means that institutional attention has stepped up and they kept coming back, but you still need that last piece, which is it valid right now? So whether you're using Monday's opening price, today's opening price, VWAP, anchored VWAP, a moving average, it doesn't matter. That needs to be valid in the same context as the longer order flow. Now, that might be confusing, right? Raise your hand if you had a stock that was strong going down and you bought it on the way down and it kept going down and kept going down and kept melting. That means that you didn't have a reference point to tell you it stopped going down or it's not going down, and then it's safe to look for entries. So again, raise your hand. We've all done it, right? You look at the strong stock, it's going up and you're buying on the pullback, but it keeps going down and keeps going down. So that means that you need to do one more thing, is have a reference point that tells you the short-term tape reading tells you that it's in sync with the direction you want to trade. It's not that complicated. Just think about long-term. You could even say 50-period moving average, 20-period moving average. That could be as simple as that, right? But then you still need to hold the trade for the maximum rewards. Remember, the only reason we choose to accept risk is because the reward potential is likely. Now, there's two parts of that, two parts of the trade that are really important. The first is which stocks. Again, a big error that people make, really smart people, are in the wrong stocks. Now, how do you find the right stocks? Well, we have to start out with the market, right? We actually break down what the market's doing. We're going to come back to the stock in a second. And you got to have an opinion. You got to have a bias. You got to have a framework that tells you, is the market obvious? If yes or no, especially if it's yes, then I want to first find ideas and sectors specifically that are trading with the market. So if we have an obvious market, the first thing we want to do is go to find sector rotation of sectors that are trading in sync with the market. And for a while, for about 3 or 4 weeks, that was technology. And quite frankly, it also was energy. So if we kind of take a look at the XLK, you can see this short-term rally that we have, and they're actually pulling back a little bit now, right? So they're kind of working their way out of the system. I'm going to show you a metric on that that's going to blow your mind in a second. But then you also have energy. Energy has been really strong. We've been watching stocks like MPC kind of take off, and now it's in another box waiting for the next move higher, right? Even ExxonMobil is starting to show some signs of really good buying pressure, and that really hasn't been for a while. But these two sectors you just saw on that radar were kind of working their way out of the list. They're working their way down. Energy went down. Technology went down, right? We're starting to see healthcare, financials, and of course, consumer cyclicals working their way up the list, which takes us to, if the market is not screaming obvious, the next batch of stocks, the next, I guess you would say, best stocks to buy now would be the only way to put it. And remember, everything we're talking about here is for educational purposes, right? It's up to you to make that final decision. This is how I do everything. This is how I make my money every month. The next level, if the market's not obvious, is sector rotation. Sectors rotate up and down based on economic conditions. Right now, the biggest economic condition, interest rates. It's affecting everything. It's affecting mortgages. It's affecting housing starts. Like all of those things are taking a hit right now. Residential construction stocks, which were on fire for a while, we could take a look at those right now. Lennar and those guys, you can see interest rates are now starting to affect them, where they had this beautiful run from last year, and now this lagging effect of interest rates, which is why it's so important to be paying attention to what the Fed does this week. That's all fantastic, right? So what does that mean for a trade? So that means we're going to be watching financial stocks. So what I'm going to walk you through now is we're going to walk through the daily ticker today and mapping out what ideas I am going to be watching today. So we're kind of taking you behind the scenes today into a bigger picture of what we have going on. And by the way, this is my we do this every Monday, but this is a small sample of what we do behind the scenes, where I'm giving out the stock picks, my active daily stock picks, my entries, my exits, my profit maximizer, all of those kinds of things. If you want to get this and do a trial for 90 days, click the link below and you'll get everything from me. And there's a 30-day money-back guarantee, so you really literally have no risk to go behind the scenes. I'd love to see you on the other side. It's called the Daily Ticker Plus. You can click that link in the description. So let's actually go through what I'm looking at today and how we're using sector rotation to find the stocks that are the hottest right now. But I want to give you a lesson first in stacked order flow. And we're going to use that Morgan Stanley chart as a method of understanding what it means that a stock is under accumulation and how long. So remember, there's two levels of stacked order flow. The first level of stacked order flow is stock specific. And remember, don't worry about the label stacked order flow. It's something that I uniquely came up with. It basically means that smart money is buying that stock, and it's obvious. The only thing you want to next kind of lean on is how long has that been happening? So we have a phrase that basically says initial signs of reversal equals initial position size. So if you catch something that's going like this, you have to have the right position size until the stacked order flow looks a little bit more obvious and longer. So recently we've seen, especially energy stocks, have had stacked order flow for a couple of months now. There's been a lot of talk about crude oil, $90 crude oil, maybe going to $100. And a lot of those stocks, especially oil and gas, E&P stocks, have been rallying pretty hard, right? That's kind of pausing right now. And we're seeing energy stocks, financial stocks, sector rotation in the beginning stages of stacked order flow. Now, this is the biggest thing. First sign of stacked order flow is how long it's been happening in that stock. The second one is it also affecting a specific group? So in other words, if we're looking at Morgan Stanley, is it affecting all the other stocks in that group? Well, Goldman Sachs exploded. We're looking at financial stocks. What other areas has stacked order flow kind of worked its way into? And you're going to actually see one particular industry group right now, probably not on your radar. Insurance companies have actually recently been pretty good and still setting up two trades. There's two trades that are setting up right now today, had bullish gaps on Thursday, paused on Friday while the market pulled back, and I'm looking for some short-term cash flow in those ideas right now. So essentially, I just want to recap what we just went over. First, looking at the market, is it obvious, yes or no? If it's obvious, great. That's one big part of the trade. Because remember, every time we're looking to accept risk, which that has to be the first thing you think about. If I choose to accept risk, which stocks are likely to hit my profit target? Not always going to. We're going to have losses. Get that garbage out of your head that anybody never has losses. They're living in fantasy world. That doesn't work. All right. It's not even necessary to worry about your perfect. And by the way, everybody is bragging about this huge high win-loss percentage, and you think you can't trade unless you have this win-loss percentage. I got news for you. It is infinitely easier to not need an 80% win-loss percentage to get paid. You don't need it. If you do what I'm talking about today, and I want to show you this again one more time because it's really important. When you understand, let me zoom this out just a little bit. When you understand what this looks like and you are tracking the metrics and you're tracking them and you understand when it's amazing and you could make a little bit more and size up a little bit more and maybe even hold a little bit longer. And you have a way of recognizing, oh my gosh, this is horrible. I'm going to pull my leverage back. I'm going to reduce my exposure to the market. Maybe I'm going to move my trailing stop loss up a little tighter and you protect your profits. When you understand that there is different types of market conditions and different ways you should allocate money to those conditions, and look how mixed it is now, you don't need a monster win-loss. Who wants all that pressure of trying to be right all the time? We want to take all the information we have before the trade, understand what kind of allocation that means, bigger position or smaller position, and then just adjust as the market's going up and down. So what if you have some small losses on winning trades in a tough market? That's okay. What's not okay is if you didn't recognize it and lower your exposure. That's the big part of reading the market that a lot of people miss. They think every single trade is the same trade. It's not. I'm going to tell you how I talk about it in the community. I've been talking about it this way for 23 years. Trading is the same exact thing as driving. Sometimes you're stepping on the gas and you could recognize when you should be stepping on the gas. And then there's other times you're in stop and go traffic. There's a rubbernecking delay. It's raining, it's snowing, and you're gas brake, gas brake, gas brake. It's when you think you should always be on the gas and can't tell the difference between those two conditions. That's when you get in trouble. So when you want to elevate yourself, you might want to take a screenshot of this because it's really, really important. You might want to elevate yourself when you understand and you're able to read what this looks like and what that means for the kind of trades, and then read this and what that means for the kinds of trades. You will reduce 90% of the stress that comes with the markets and the overwhelm because you're simply reading it and you're saying, what does this mean? When you take that last step, instead of just saying, I can see it, which is chart reading, trading is not chart reading. Trading is saying, what does that mean? And how does that mean I should put money in the market? Sometimes it's amazing. Sometimes it's okay. And sometimes it's like, I shouldn't be doing anything. Remember, just because the market's open doesn't mean we need to put money in harm's way. There has to be a good reason. That's what we're doing right now. And I just want to make sure I say hello to John Bates. John, good morning, pal. I miss you. So anyway, let's get into what the ideas are today. Let's talk about how these ideas are unfolding. And I hope that was a big lesson for you as well. So let's work our way a little bit further down into the daily ticker. Okay. First thing, obviously, what we do every day is I give everybody a breakdown. We have this list of stocks right here. They're kind of our personal ATM. Let me zoom that in a little bit. And I give a video replay of how we're looking at that. Now, if you have not done that for yourself yet, it's very, very important. All active traders, all professional active traders, and I'm not saying you have to be a professional and quit your job. That's not what I'm saying at all. But all the people that I've traded with, including myself, including our community, you need what you might call your own personal basket, your own personal ATM, where no matter what's going on in the market, you have a list of market leading stocks that you trade all the time, no matter what. Now, generally speaking, even if it's a tough market, you can find some really good ideas. And I'll give you just one good example from recently, and it's Amazon. The market hasn't exactly been fantastic recently, but look at these 3 days. 1, 2, 3 gigantic days in Amazon recently. We've also been trading quite a bit at Carvana recently. This is a $7 day on a day that the market really kind of gapped up and kind of did nothing. So I want to challenge you right now between now and next Monday. If you have any questions about this, put a comment below in the video. I'll be more than happy to get back to you as soon as I can. Build your own personal watch list. Focus on market leaders within a dollar amount that your trading account is comfortable with. And I'm quite confident that on a regular weekly basis, regardless of what the market's doing, you're probably going to be able to find something in there. Here's the mindset, though. I want to make sure that you're okay with this. Generally speaking, you might have 10 stocks in your list, right? Just for example, depending on where you are in your trading journey right now, you don't need all 10 to be in play on a weekly basis. You might be able to have 2 out of the 10 in play, and then you trade the heck out of them. Now, we get some people that are like, oh my gosh, but the other 8 didn't do anything. They didn't do what I wanted. I'm like, who cares? The other 2 did exactly what you want. Focus on those 2, like we just talked about with Amazon, right? So now let's break down everything we just talked about, from the market to sectors to groups to which stocks are beyond the optimal entry and which stocks might be at pretty solid entries heading into today. But I want to start out, before we get into that, I want to start out and show you that chart of Morgan Stanley, because it's really important as a visual. And that's really, I think all of us as traders, visually show me an example and I'll start to understand it a little bit more. So I want to work on over here into Morgan Stanley. And like I said, Sonny in our community called this out on right there. asking about this move and whether or not this bearish move was now done because of this giant bullish engulfing candle. If you're not familiar with what an engulfing candle is, it actually took out the previous low, took out the previous high, and also closed strong. So that's a bullish engulfing candle. Best case scenario, it would have closed above the previous high as well, but that's pretty powerful. It took this one out, took that one out, right? And usually you got somebody caught on the wrong side of the market. But what we didn't recognize right away is the fact that the previous candle was a bearish engulfing candle, which kind of validated this longer term move. So as long as it was stuck in this box and validating the bearish pressure, we're going to assume there's nothing to do here in this stock other than believe it's going to continue to the downside. But then we had one day. This is really the big thing. One day of stacked order flow, where this came in the following day after a bearish engulfing candle. We had a bullish engulfing candle. So we spent a lot of time on our pre-market game plan saying, okay, wait a minute. We just went from one extreme to the other extreme. I don't like the trade yet, but that means something. If we can get out of this box and get above 86, that would be pretty interesting. Bearish engulfing, bullish engulfing, testing the top of that box, testing breaking this downtrend. So this is kind of the difference between seeing the whole song, which is the bigger order flow, and then getting a little bit better at reading the notes. And Sonny was reading the notes on this one particular stock and that bullish engulfing candle. Not that hard. This is like 2 seconds to read at the end of the day, right? So here's what ends up happening. We end up getting 4 days of buying here. So remember what I said before about how long has stacked order flow been happening? In this case, it was 1 day, became 2 days, became 3 days. And we actually had a bullish gap. We had closing strong. We had good volume, right? That's the first stage. But think about this. How much stacked order flow is on this idea right now versus this 5-week downtrend? There's really 3 days. So it's smart. So if we kind of take this back and take a look at over here, and we're watching, is it 1 day or is it happening over a longer period of time? So this mentally and planning out should affect if we're thinking about getting into Morgan Stanley and the fact that the financial stocks floated to the top of the list of sector rotation for the last 5 days. I want to be clear about that. We're measuring 5 days at a time. First sign of a reversal for me would be initial position size. So no matter how strong that was, it's still the first sign of reversing. So we had bearish engulfing candle, followed by bullish engulfing candle, followed by breaking out. And now we have 3 days of buying pressure. Not enough to say I want to get aggressively long here, but it's interesting. And this is kind of how you work your way through the ideas. Now, the second part of stacked order flow is, has it started to infect other stocks? Has there been other attention in that particular sector and industry group? Well, we know financials popped a little bit, but if we kind of work our way over into, let's say, Goldman Sachs, you'll start to see that Goldman Sachs has also started to see buying pressure. So do you see how there's an allocation of your money, how much money you want to put into the deal, how much money you want to put into the trade based on how long has the smart money been doing that? Look, we're just looking to piggyback what they're doing. We're looking to piggyback, find an entry, and then use the profit maximizer to ride that thing as far as we possibly can, right? So that's the setup for the ideas right now. So we're going to continue to work our way through, right? Now, sticking with, obviously, we're talking about financial stocks, working our way down. We've also been showing a little bit more stacked order flow in asset management companies. So you can actually see here APO beautifully moving to the upside. Now, what's really fun about this, if we kind of work our way over to this chart, and again, I want to explain to you how the power of one candle, remember what we just talked about, how significant engulfing candles to be, right? Especially if they're in the direction of a move. But as we just saw in Morgan Stanley, it can actually start a new move in the other direction. Well, once financial stocks as a group started to find some buying pressure, we started to migrate over to, okay, which stocks in financials are worth paying attention to now? And we worked our way all the way down to the industry group of asset management. Now, this 4 weeks of stacked order flow started with just one candle, which was a bullish engulfing candlestick on heavy volume. So I want to show you that. You probably want to take a snapshot of this too, because this is really what kind of an end of day game planning. It's kind of fun because you really like, when you know what you're looking for, you're like, okay, there it is, and I'll get involved, or I know what I'm looking for and I can't find it. I'm not going to do anything. It's really that simple. You just need the structure. And sometimes, maybe you might need a coach like me once in a while to tell you like, slow down, there's nothing to do, or let's go get them, belly up to the bar is what we call it in our community. All right. So getting back to the engulfing candles, you can actually see this engulfing candle after this short-term move after earnings. So you can actually see this is the gap after earnings, right? So again, a significant reference point. This bullish engulfing candle after this pullback, which was basically profit taking, right? You can see that big. So again, can you visually see it now? How long has buying? See how you're seeing charts completely different now? It's not just an uptrend anymore. You're actually looking for who's allocating money and how long have they been doing it. And by the way, don't worry about who. You'll never figure that out. So this bullish engulfing candle started this 4 weeks of buying pressure. Now it's a little bit beyond the optimal entry at this point, but you can actually see how good the stacked order flow has been. Now here's the thing, and this is probably the whole point of everything we're talking about. If the stock market has been beating you up, especially from August to now, I get it. I understand it. It means you need to raise your game just a little bit higher than what I'm showing you right now, right? Raising it from maybe what you're doing right now, maybe following some of the processes I'm doing right now, maybe getting my stuff every day like I just told you before, right? But here's the thing. You can't tell me there's no ideas when we're finding ideas like this when we are tracking sector rotation. Again, we've been all over some of these energy stocks. They've started to cool off a little bit. But think about this. All of a sudden, we have higher lows. They're holding the bid. We're seeing higher highs. We're seeing the sector float to the top, right? We're seeing news all over the place about crude oil. Crude oil finally blasting through that 82 level we've been watching since last year. Look at that. Couldn't get through it. Finally got through it. We have a few weeks of buying pressure. Now, here's the thing. I missed it. Why? Oh, gosh, I miss all these ideas, right? Well, I got news for you. This stock had a 4-week rally when you are understanding and tracking rotation, right? When you're doing what we're talking about here and how I'm showing you how to do it, this went sideways for 2.5 weeks before making this $14 run to the upside. That's plenty of time to do this research to say which stocks are in play. I just want to throw that out there. You got to challenge yourself. If you're not getting the results from the market that you want, you got to challenge yourself and ask yourself, why not? Okay. So now we work our way through the rest of the ideas. You can actually see we're setting up a trade in Zion. We're looking for a breakout over at 38. This bullish gap after earnings is still kind of hanging in there. Again, we're sticking with what's obvious right now. We're not hoping something reverses, although I do have an idea right now that I want to show you that I'm setting a buy stop for. So now you can obviously see insurance stocks are setting up pretty well. Nice bullish gap here in MetLife with a small cash flow type trade, but lining up pretty good. Finally took out that level. And we just talked about Morgan Stanley and Goldman Sachs. JP Morgan is on the verge. It's got to get over 150. You can actually see, again, I'm doing exactly what I'm teaching you right now. I'm setting the lines. I'm setting the box. I'm saying what's the right price. JP Morgan needs to get over 150. So what I want to get across to you right now as well, obviously I'm doing this in the daily ticker, which I just talked to you about before, but I'm setting up trades that are valid now, which is a game plan. And then I'm also setting up trades in a tracking journal that they need to hit a certain level before I start to look at them. So you don't want to get in early because you want to see price validate your idea first before you put your money in there. Remember, you want somebody stepping up with order flow and pushing it through that price. Then we make it a decision on whether or not we want to get involved. So JP Morgan over 150. The other one that I'm going to talk about in a couple of seconds is Moderna, which is really interesting to me right now and also has a very significant level. I'm going to point that one out to you in just a minute. So working our way down through the rest of the list, consumer cyclical has been pretty strong. Obviously, Tesla had that news on the AI supercomputer and the 50% reduction in manufacturing. We really haven't seen that kind of move. I was actually expecting this thing to blast up and hit this gap fill from the previous earnings. Hasn't done it yet so far. It closed well bid, which means higher highs and higher lows, but still closed near the lows. So not quite moved. It's still bullish, obviously. And again, can you see this in a heartbeat now? Well bid. Somebody's buying it over a few weeks. It's interesting, right? So we're looking to see if we can recapture that earnings gap. So while on the subject of electric vehicles, this is really one of the biggest things I wanted to get across for this week. Electric vehicle stocks in general are starting to consolidate. And this is usually where we get explosive price moves. So I want us as a community to keep an eye on LI, XPEV, and Rivian this week. And you can see that they're all kind of doing the same thing. And if you know anything about trading, again, keep it simple. There's only two types of patterns you need. There's consolidation patterns and an expansion in volatility. One always leads to the other. So what we're looking at right now in these lower tier electric vehicle stocks is there was massive volatility getting tighter and tighter and tighter. And if you know those two patterns, consolidation to an expansion, the next likely move is an expansion in volatility. And if these things break out of this inflection point, again, significant reference points, they're going to set up new trades. So you can actually see here LI and XPEV. So now, again, getting to some good ideas for the week. Other stocks in consumer cyclicals setting up here. You can actually see here Williams-Sonoma setting up a new trade. I believe that's around $15, $20. Now we work our way up a little bit further to a different level of stacked order flow. We're now watching industry groups. And we just talked about that. So we want to make sure that we work this way down a little bit more. And you can see Chubb. Now this is a very important lesson I want to get across here. There's pick a side and then pick a spot, right? Picking the side is understanding stacked order flow kind of in the context of what we did. But remember, there's a whole second part of the trade, which is managing the winning trades with the profit maximizer. But prior to the profit maximizer, to put even the trade on in the first place, you need to be at an optimal entry. So even a stock is obvious, you need to make sure that your timing is good so that that entry justifies the likely profit potential, right? So if we take a look at Chubb here, I'm going to actually give a different version of this so you can actually see it a little bit better. Now, this stock might be obvious. And again, look at that, a nice bullish U-turn. 7 green days in a row. You'd be like, oh my gosh, I got to get involved. Well, no, it's at a pretty big resistance level before it starts to make a run towards up here at 227. So roughly $25. So what I'm looking for, even though this stock is in the right group, the right sector, it's too far from an optimal entry. So I'm looking for Chubb to pause here for a few days around 210 to 212 before we look for another trade up towards that 227 level, right? So it's important. That's the last part of the trade before you start to manage the winning trades, right? Swing alerts, a couple of pockets of opportunity in healthcare stocks, but this is the one that I'm looking at in a big way this week is Moderna. Moderna's news and the healthcare stocks in general have been kind of perking up a little bit, and you can see the longer-term bearish order flow. We now have a failed test of that previous low and a really obvious level that matters. It was a big support level here. It became resistance here, showed some relative strength on Thursday and Friday, and now I have an alert set at 118 in Moderna. So it doesn't mean I'm buying it today. I want to see it validate. So remember what we said before, initial signs of reversal, how much stacked order flow should dictate how much I put into the deal. So if Moderna finally gets back above that 118 level, which is the level that I'm putting in my tracking journal this week, I will look to initiate a first piece of a trade, looking for positive feedback. And if we start to see stacked order flow from 1 day to 1 week to a month, we can start to piece our way into that trade. And we always have planned out add share size for every trade that we do. All right. Watch this video more than once. We covered a lot of good stuff on how to think and how to actually think about how you're going to allocate money to the market in the right way, and that every trade is not the same. So I want to thank you. Hopefully, we're going to have an awesome week. Thank you so much for joining me here today. If you could do me a favor, give me a thumbs up and hit that subscribe button if we gave you a good show today. And if you want to get my stuff, you want to get that 90-day package for the daily ticker and get all this stuff every single day. Like I said, 30-day, no risk money back guarantee. You just got to get started and see everything we have behind the scenes. Click that link in the description as well. All right. Thank you so much, everybody. I want you to know how much I appreciate it. Have an awesome day, and let's have an awesome week.